All right, welcome today. It's Saturday and it's 19th April 2025. So it's very much the usual coming to YouTube review and analysis I did previously. And today I want to just analyze two pairs. I've already discussed what the channel is all about, so there is no need for me going back and forth saying this, saying that. It's simple. This is where I analyze the trade, where I show my own trading, how I trade my strategy. This is where I share the strategy, how I go about trading the market, the financial market, from the higher time frame to the lower time frame. And last week I made analysis on USDCHF and USDJPY, and I said I'm calling these pairs bearish until it breaks out. I'll only start selling these pairs if it breaks out of a particular level. And lo and behold, this throughout last week the market has been ranging. What did I do? I just stayed out of the market. I has only spotted one opportunity, one buy opportunity on GU, which is GBP USD. I have an open bullish position on that pair. I'm still monitoring gold for the moment. I want to still continue the trend I had, because I've not been on the trend for gold for some time now, because I don't like to chase the market. I like to wait for the market to make a move and come back to my entry. And last week I shared it with some of my students I'm mentoring, and we analyzed it together individually. We found out that especially USDCHF, it's very much ranging. It's still on a tight range. If you're monitoring the 4 hour chart, you discover that it's very much on that tight range it has been since last week and 2 weeks now, actually. So this is very much tells you that the market, it ranges at least 60% of the time, or just call it 70% of the time it ranges. Then whenever it's making a move, the movement is once. So that's why if you learn how to position yourself at the right time, at the right key level, and know that once you see this is when you want to start sizing in, when you start going long or short. It's as simple as that. So if you don't know this, if you don't have this information, you are going to always chase trades. You're going to always chase trends, and guess what will happen? Whenever you chase a trend, you're going to stop that, because you might be chasing it when the trend is already out, and get stopped out when it's making pullback, just like gold. Imagine someone that starts buying it where it was selling 3,200 per ounce price, and now it's retracing, it's making pullback. So you're likely going to get stopped out. But now, for someone like me who've seen this, I analyzed it with one of my students, and I said, we've seen this, it has made a pullback. It is time for buy opportunity. After we see so and so, when we see a key level fulfilled with a 4 hour candle close above that level, then we'll enter our buy position, move our TP to 35 and 4k per ounce price, then move our stop loss at least 100 pips below, because this is how we trade. We're not day traders, we are not scalpers. We are more into swing and position trading. This is how we accumulate. When we get to a particular level at 100% retracement, we'll move our stop loss to break even and add one position. If we're starting with 0.5 lots, when we are going to add, we'll add 1 or 1.5 lots. Sizing, move stop loss accordingly. Then once the 1.5 lot is moving, along the way, after 100% retracement, we'll add extra position, maybe 2 lots or 2.5. This is how we go about adding position and accumulating. It could take weeks, yes, takes months, but at least this is how you're going to, if you're managing an account, if you're managing account for someone, let's say for 6 months or a year, this is how you make 2%, 3%, 4%, 5%, 20% of that account, depending on the capital you're managing. This is how you make 20%. I don't like to call numbers, but I like to call it in percentage. This is how you make 20% in a year. This is how you make 30% in a year, by just understanding how to accumulate. Once you understand the pattern of your accumulation, you won't be in this tantrum of always funding your account, always blowing up. You can do it with $100, you can do it with $50. All you have to do is start with nano lot size. Do it. I'm creating a course where I'm going to very much break down everything in detail, from the higher perspective to the lower. It's very much going to be A, B, and C. It's going to be 1, 2, 3. It's you being able to know how I go about trading. When I'm talking about key levels, how do I plot these key levels, this massive and strong support and resistance? the major support and the major resistance. How do I go about plotting these levels? These are the key things to understand. These are the things to know. How do I trade when there are economic news releases, when there are news? How do I see the market? I don't trade the news. I don't do that. That's a silly way to trade. If you're trading the news, you're gambling. This is not how I trade. If you're managing, let's say, accounts for someone or for some people, you trade with precision, you trade with knowledge, you trade with data and facts. You don't just enter a trend because of you see it running. No, you have to have a reason why that trend is running and where it's actually going to and why you should enter that trend. So it is for today. I'm going to very much analyze, is very much a review on my previous analysis on USDCHF and USDJPY. I'm going to touch also on gold and GBP USD. So you know what to do. Just click the subscribe button and always follow and watch out for more. I would see you on the inside. Let's go to my screen. Alright, welcome inside my screen. As you can see, like I said, this analysis I did it, this is the second week. I have been calling this pair bearish since it broke out of this neckline. So go watch my previous analysis. And again, I said today is very much about review. Like I want to review what has happened in the past based on my previous analysis. You see, this is how you go about trading. This is how you manage an account. This is how you accumulate, especially if you're managing someone's account. You're managing accounts for people. You don't just trade when you don't see it. That's why I don't like this idea of monthly returns, because the market doesn't move the way we think. This is a business, and when it comes to business, every month is not going to be the same. Likewise, life, every month is not going to be the same. Some months are up, some are down. And now this is the second week this pair has been ranging, and this is the first week of the second week. I said after this breakout I'm going to continue the bearish position. However, before I do that, this is the overall target. I want to see it make pullbacks to this support that was broken, and this support now is acting as a strong resistance. If I should go to the daily time frame to very much make you understand what I mean. So all these are daily candles, and this is the first day it broke out, and I said after this it broke out of this was the next turning point. It broke out below, and I said I'll only start selling when after I see a pullback to this level, or I see a 4-hour candle close below this line, this price 0.80405. So this is where I want to start shorting to this level, and when it gets here I'll break even and add extra position. After I see some 4-hour candle close below here, I will add extra positions that will run through the downside. However, this is how many days now? This is the first, second, third, fourth, and first, second, third, fourth, fifth, sixth, seventh, and I call this analysis last 2 weeks, or last week during my analysis on YouTube, and I said after the break I want to start entering. Now imagine if you are a day trader or you're a scalper and you start shorting this pair. Merely looking at this on the daily time frame, you will see that this is a range. As you can see, it ranged for some time and broke out. It ranged, it broke out, it ranged again. It's now trying to make a breakout. Just as simple as that. When you look at the left side, at your left hand side, what has already happened in the past gives you the ability to interpret what is likely going to happen in the future. It's as simple as that. If you go to 4-hour time frame, on the 4-hour time frame, it is where I pick my entries. As you can see, it's very much there. The informations are there. It's telling you that this pair is on a massive range, and this range is not just any range. This is a choppy market. This is a choppy range whereby you don't know if it's trading in between. Normally a good range trades in between support and resistance. Let's say this is acting as a support and this is acting now as a resistance. If it's a good range, you see it bouncing off in between these levels. Now you can say, okay, when it gets here you want to sell to this point, when it gets here you want to buy to this point. However, this is what is going on. This is just a very unclear range. So all you want to do for yourself is to very much stay clear. As a trader, you only have two market conditions that you trade from: the uptrend, the downtrend. I'm sorry, two market conditions: the trending market and the ranging market. On the trending market, you either want to follow the uptrend or on the downtrend, while on the ranging market you want to be trading in between support and resistance. These are the two strategy you can develop, you can tweak your strategy into. These are the two range a trader is supposed to be trading into. Anything apart from trading a range, that is trading in between support and resistance, or trading a ranging market, you are definitely going to blow up your account, and you're definitely gambling, and you're definitely going to keep blaming your strategy, and you keep buying courses, you keep jumping from one YouTube channel to another. It's simple. One strategy is enough. If your strategy, it's going to show you when a pair is trending and also able to show you when the market has gone into a range, my bro, stick to that strategy. There is no other strategy better than that. Don't let people who fool you come here and tell you they have a 90% win rate. Those things are actually unrealistic, if you ask me, because you can't win 100% of the time. This is trading. It's a dynamic environment. You being able to know where the market is coming from and where the market is going, it's only what you need. Once you go into trading, if you want to be profitable, you have to learn how to tweak, how to remove, not how to add. You have a strategy. Now learn how to remove some things that are not important. Like if you can see my chart, there are no indicators. It's just levels that guides me on how to trade profitably. Simple as that. So this is it. I'm still waiting for this market to break out of this range, and I will start shorting this pair from here. My stop loss, once I enter here, my stop loss is very much going to be here. But once it gets here and start turning, I enter up around here, my stop loss is going to be around above here. It's as simple. Now look at my RRR is massive, 3.98. So come on, if you're, this is how you make 5% of the account you're managing, or 10% of the account you're managing in just a one trade. I don't like to call numbers, but this is it. When you are able to do it this way, you will understand everything I'm talking about. That's why I'm compiling a course that is very much going to show how I go about trading. How do I plot these levels? How I interpret the monthly time frame, the weekly time frame, the daily time frame, and the 4-hour time frame. Everything is much inside that course. The course also, I'm going to be adding a PDF material, readable materials for you to know what chart patterns are. I don't trade candlestick patterns anyway. I trade strictly chart patterns and price action. It's very easy. So let me go to the next pair, which is USDJPY. Yeah, I have an open position here. I started shorting from here, and my stop loss is very much above here. And look at the targets, and this is 4.78 RRR. It's as simple as that. And when it gets here and breaks below it, I add another position. But when it gets here and show me some sign of reversal, this is it. I will start buying from here, because USDCHF and USDJPY are almost positively correlated pairs, so they go in the same movement. So as you can see, this is it. This is a strong support. USDCHF has broken its support. USDJPY is yet to break the support. It's trading to the support. So this is it. I started to call it bearish when it broke out of this. It broke out, made a retest, and started knifing down. I said, okay, my first entry was here. I took out that. I waited for this, and I entered again, took out here. Now this is the third entry I have on this pair. So on the daily time frame, it's easy. It's easy. Just, it's like merely looking at this. This is pure price action. This is pure price action. Like, where is the market going? Where is it coming from? And where is it going? It's coming from the up and it's going down. As simple as that. So this is it. Lower high, lower low, lower high, lower low. Lower high, it's coming to make a lower high, or it could just knife all the way down to this support. And when it gets to this support, one or two things is to be anticipated. Either it breaks below it like USDCHF, or it turns the trend to the upside, and this is where I want to start buying. I don't have a bullish bias on this pair anytime soon until I see that come to fruition. So now, like I said, I have an open position on on GU. I have an open position on GBP USD. This is it. My first entry was here. I closed it around here when I noticed that this is likely going to be a turning point. I closed it and I said, okay, now I seen that it has broken above this resistance, and I waited for retracements on the 4 hour, and I entered, and now it's very much up. Yeah, this is it. I entered here. I started buying from here. This is where I'm going to take my TP, and this is 2.75 RRR. This is my TP, and this is where my stop loss is. And now I want to see if this is actually going to turn the trend. This is a point of action. However, this is a 4-hour time frame. It's not as strong as a daily. So on Monday, I'm very much going to be monitoring it. If it shows some sign of retracements, or then I'm going to close out and at least take something out of it, but I still know that it's coming up here. Likewise, gold, yes, gold has done its own. As you can see, this is where I want to start entering, and if I enter, the TP is long, so this is 13.80 something RRR. It's very long actually. Like, this is the price. I started calling it bearish when it broke out of this level, and I knew it. If you watch where I started this channel, I started calling it bearish when it was still trading at 2.5. I said it's going to reach 3k, 3.5 and 4k, and look at it, and it has happened. And so this is it on today's analysis. Like I said, anticipate, because it's very much going to talk more on everything I've been analyzing, how I go about plotting these levels, how I enter the market, how I also interpret fundamentals, because fundamentals are the key things to me. Technicals are just my gatekeeping. I don't trade using the technicals. I trade using the fundamentals. What are the banks saying? If there are news releases, how do I see them? Do I trade during the news? I don't, because it's a stupid way to trade. So I'll see you next week, and let's go back to my screen. See you. Let's go. Alright, I want to thank you for sticking through the end of this analysis. It's a very brief analysis. The intro is very much making you understand what you're about to see and what you're about to experience. So, like, as you can see how I analyze the markets, I've already mapped out my levels. It's just how I follow those levels religiously and how I follow them procedurally. It's just you knowing that these levels are here for a reason. What are you seeing? Did you see this? Did you see that? Once you understand this, you go ahead and size in, you move your stops accordingly. Then all you have to do, you can just check. For me, I check if I have an open or running position. I check my trades twice a day or 3 times a day interval. I don't just sit in front of my system and just while away time. It's once I know where I've entered and where this pair is likely going to, it's very much going to help me to know, okay, this is where I'm supposed to break even, this is where I'm supposed to add position, and this is where I'm supposed to take my profit. And again, if there are possible reversals, this is where I anticipate that to happen. And once I get here, I want to move my stop loss to break even. It's very much that. So I will see you on the other one, and next week we'll see the same thing. And you know what to do: subscribe, comment, like and share. If you have anything, any question, just drop it. I'm going to see to it, and you know what to do. So anticipate the course that is coming. It's going to be it's going to be me pouring myself into that course, because I did it very much to clear the air of what multiple time frame analysis is all about. So you know what to do. Follow and anticipate it. See you on the next one.